Good afternoon, everyone. Gabe Velazquez here with you, transparenttrading-solutions.com. Back again. I've been on holidays of sort, right, with the 4th of July and so forth. That's why I wasn't here Friday, but I'm back. I'm also really pleased to announce that beginning next week, I am actually going to cease doing the live videos. I've had a lot of requests for me to show charts and this and that. So what I think we're gonna start next week. We're gonna post some videos here at the same time, but they are going to be not live. You can watch them anytime. I'm gonna review the charts, give you some notables for the week, prepare for the week, lots of visuals, which I'm sure you guys will get a lot more out of than seeing my face every couple of every twice a week, whatever. So that's starting next week on Tuesday. I'll post it on Twitter. You'll get the notification. Subscribe if you're going to watch the recording later. Subscribe. So I will be changing this up. They will no longer be live, so you can watch them anytime. But if you want the fresh posting, it'll probably be around the same time, starting on Tuesday, Wednesday. I may even do 3 of them in the week. So that's going to start next week. Okay. All right. So I'm kind of excited about doing that, and you will get a lot of visuals, a lot of charts, and that type of thing, which I know everybody's kind of been requesting. So, all right. So since I've been gone last week, essentially not a lot going on. So if you are subscribed to my newsletter, I've been writing about. I'm just going to go through the notables. The S&P really has been. Since I was here with you I think it was last Tuesday, a week. It's been, because Tuesday was 4th of July. It's been a week and a half or so. We essentially, the S&P was unable to break above the 44.95. We had a big rally closing out last week with the kind of tame PCE number. But in a nutshell, looking at your daily charts of the S&P, you're looking at 44.95 on the highs, still struggling to get through that. We bottomed around 43.30 all this week. We attempted another rally earlier in the week, and even today, and that also failed. So I guess in a nutshell, we're in a big trading range, 40, let's call it 43, 4380 to about 4,500. And what really is really of note here lately is going to be the 10-year. I've been writing about that, been talking about the 4% kind of being as a key level. We did the 10-year yield did go above that. That was actually what spooked the market a little bit yesterday. We did recover though from the 44th, from that big kind of ugly level, and essentially gave it all back today, which is really interesting. So generally speaking, it's been just a very choppy, low volume kind of trading environment. Not really surprising since there's been a lot of not a lot of volume. I think the volume's coming back next week. Similarly, the NASDAQ also, in fact, the NASDAQ was unable to break above the prior week's high, 15,475.50, which is really interesting. And then we made a lower high, and then even today we made another lower high, and we failed again. So that could be setting up for a very interesting situation next week with the NASDAQ. The fact that it is kind of starting to lag. The big winner today was the Russell. Been talking about that as a kind of a catch-up trade. We did have the best performer today was the Russell, but generally, again, Russell in a big range, 1920 down to about 1840. What's going to break us out of this range? It's going to be interesting, but I do believe that the Russell will falter if rates continue to go higher, and so it's going to be worth watching. A lot of the action, as if you guys have been trading the bond market, that's really where the action is. I mean, the 10-year broke down, the 30-year coming into some levels that we haven't seen since March, when the banking crisis, 122.19 on the 30-year. The 10-year broke below that key level I've been talking about, the 110. That took the yields up to above 4%. Also, I've been trading the 10-year yield, the micro yield 10Y. Actually, we did attempt to short that earlier in the week, and we took a small stop out on that. But we are now trying to get long TLT, finally coming back down to that 98 level on the TLT. So we may get filled on that next week. And just the bond market has just been really, really hit hard. Yields surging. If they continue to go up like that, that it will eventually, will pressure stocks. You saw that a little bit yesterday, but with the low light volume and all that, I still think it's really not as significant. Starting next week, we've got CPI, PPI. We've got bank earnings starting on Friday with all the major banks reporting, JPM, Citi, so on and so forth. So that's going to be, we basically kick off the earnings season, which is going to be really great for our options trading at TTS. I'm running a class right now, which is going great. So that's going to really give us just a ton of opportunities on the options front once the earnings kick off. So looking forward to that. Dollar also notable today. The dollar did fall off, which is really interesting because we haven't had that. The dollar had been tracking rates up to this point. Looks like we've broken that correlation. And if you saw, the dollar really sold off today, really hard. In fact, looks like it's breaking down to 102. Kept bumping up against that 103.5 and finally broke. Looks like it's gonna ready to break 102, which really can have some major implications trying to get long silver. The currencies actually had a really nice rally today. If we do break down, then we probably head down to that 101 and eventually 100. What I find really fascinating about the dollar breaking down, even in the midst of higher yields, is that maybe inflation here is going to kick in, and I think that's probably why people are selling dollars and going into other currencies. If inflation is going to continue to be stubborn, obviously that erodes the buying power of the dollar and so forth. So that's, I mean, if you want to attribute that, I think that may be it. Just technically, this 102, regardless of that, the 102.16 is going to be really fascinating to see if we can break that down, because that will have some major implications on the metals and all the currencies. It also notable today, I've been kind of talking about the yen. The yen was meandering pretty much all week. And if you look at your charts, we got a nice little pop in the yen for the first time in a while. So that's another situation where, the yen has been kind of been really beat up as rates there have been, kind of kept, even though they're not negative anymore, they've come up to, basically equilibrium, neutral as opposed to negative. And so that's been a very good source for the carry, where you short the yen and buy other currencies. But interestingly, today, I kind of noted that to my members. We did, if you look at your charts, we got a really nice pop in that, which if it does carry, really, I've been trying to buy the yen around the 68, 69 level, but never got there. So this could be setting up for a nice opportunity there to go long the yen. So that's something notable. British pound, we have actually next week, we have New Zealand, Canada, I believe, Bank of Canada, Bank of New Zealand announcing interest rate policy. I may be missing one other one. I can't remember offhand, but yeah, we have some bank announcements. I know Canada and New Zealand for sure. And the other one, I believe, actually, I'm going to look it up here for everybody. for next week. We also have a grain report next week, by the way. I've been talking about the grain market. So, yeah, let's see. Yeah, we got New Zealand and Australia. No, they got a governor. So, yeah, looks like Canada and New Zealand. I think Australia is next the following week, which will really impact the New Zealand dollar as well. And so that's something to look forward to next week. All generally, the currencies really had a nice pop. The one that's looked the best as is the British pound, held at 1.2614, and now it's approaching some really decent distribution levels. So if you're looking for some currency trades, maybe the British pound and the yen look like it's setting up here. Also, the peso could be coming up to a level as well. It's got a big gap to fill at 58. So something to look forward to again next week. Other than that, really, oil also perked up, trying to did break above the 73, and looks like it's headed back up to 76, with OPEC still talking up, supply cuts and so forth. Finally did pop. That's, again, another inflationary situation that is worth watching. And again, with rates the way they are and labor market remaining stubbornly high, that's the ADP number last week would be interesting. On the other hand, too, you can see that the nat gas market, again, just kind of meandering, still can't get any traction in either direction, even with the warm weather and all that. So nothing really to talk about there. And then you got a big grain report next week. We've had some big swings in soybeans, back and forth. Those are all coming in. Soybeans are coming into a really nice level in the 1280 area. If you take a look at your charts there on soybeans, wheat also. We got Wednesday's the big grain report, so there may be some really nice levels there on the grain markets. But yeah, that pretty much sums it up, everybody. I mean, there's really, again, light volume this week, but that's going to change next week. Very interesting, even though there was light volume, we had the ADP number, and today, again, very interesting with the dollar, and rates really surging yesterday and continuing to surge. That's really going to this point, hasn't affected the stocks. Last thing on the stock market, buyers have, typically what's been happening for the last several weeks is every pullback in the early part of the day has been, picked up by buyers. In other words, you've got the buy the dip kind of mentality still working. One of the things that's going to be really interesting next week is, and that was interesting today, that we closed right on the lows. So the gains, they did that this morning as well. They popped it, went up. The S&P, as you look at your charts, the S&P rallied and then failed, and then actually gave it all back towards the end of the day. So, but didn't break to a new low. The low to watch, like over the weekend, is going to be the 44.18 low, that pivot low that we made as a result of the ADP hot numbers, and then we had that really nice bounce. So that's really going to be a level to look at, and clearly, if we break through that, then I think we're headed down to 4,300. There's a gap to fill, and so on and so forth. So that's going to be interesting. More or less, the character of the next pullback is going to be more important than the actual levels to see if the buy to dip mentality still comes in. And obviously, with earnings coming up, it's going to be really fascinating. So I do expect some volatility coming back in. We did get a pop in the VIX yesterday, which was really kind of interesting. We traded up to 17, which is, if you look at the chart, that's interesting because it was actually a distribution level. If you look at your 60-minute chart of the VIX, that actually had a distribution. So it rallied from 13 to 17, came all the way back as the market rallied and closed right around the 15. So still watching the VIX. Also, I haven't really talked about this. I'll be talking about this in our videos next week. Is sentiment is starting to get extreme on the bullish side using the AAII. So I do cover that with my members. Um, there are some key levels I look for there. I'll be probably writing about that over the weekend. So if you haven't subscribed to the newsletter, uh, hit the subscribe button on the bottom there. Or if you hit the website, you'll get a prompt to sign you up for the newsletter as well. I'll be writing about that this weekend, the sentiment, extreme sentiments. I only look at sentiment on extremes, and we've had extreme sentiment numbers last year around October, and sure enough, that was the bottom when everybody was, kind of leaning towards being super bearish. I kind of talk about that. After this huge rally, now we're getting to extremes on the other side. Not quite yet there on the AAII, so we're not really there, but we're getting there. And I think another pop. Those are released every Thursday, by the way, but kind of starting to track those a little bit. So with the VIX down around 13, AAII bullish sentiment getting to extremes. We'll see. Still got to give bulls the benefit of the doubt until proven otherwise. So that's kind of what I'm looking at right now. Okay. All right, everybody. I'm going to get out of here. Have a great weekend. I think next week volume starts coming back up as everybody returns back from vacation and so forth. And again, we've got some more economic data, CPI, PPI. We've got earnings starting, which is really the most exciting for me, is the earnings getting going, because that really presents tons of opportunity for us on our options trading, which is we actually had a really great month. Again, not to say that we can continue that. No guarantees, obviously, and past performance and all that, but that's really where we're really getting some really great opportunities in the earnings plays, and we're going to get a ton of those coming up. So pretty excited about that. Okay. All right, everybody, have a great weekend. Again, if you want to subscribe to the newsletter, and again, just last thing, next week, I will not be live, but you will get a lot of more visuals. I'll be going through the charts. So I'll have a little box where you can see my face, and I'll be showing you the charts and so forth, and maybe some other graphics and stuff. So I think that will be exciting for, even though it won't be live, you'll probably get a lot more out of it. I know I've been getting a ton of requests on that. So look forward to that. Subscribe to the channel when the video gets posted. You'll get the notifications. I'll probably post it on Twitter too, starting next week. Okay. All right. Have a great weekend, everybody. Take care.